Hey, what's up? It's Ryan here, Forever in Profit. Basically, today I want to go over triple tops, triple bottoms, double tops, double bottoms, price action, a little bit of support and resistance, um, and divergence with the little trick. Now, the reason why I want to go over these things is because in the marketplace, mainly I'm gonna go over a naked template, guys. So hope you could bear with me on this. The reason why is because I want you to feel more comfortable trading, so you can see patterns more clearly, like a head and shoulders pattern. Clearly, there's a drop, but I want you to focus more into grasping the naked chart analysis. The more you understand about the market being naked, the more of a aggressive trader you're going to be to place more aggressive lots, meaning 10 lots, 20 lots, 30 lots. Sky's the limit. Who knows? It's all about what your account balance is, what you're comfortable with, and how aggressive can you attack the market when the opportunity presents itself. One of the things I do recommend is using an RSI 5. When I was getting into Divergence and I was using stochastic, I realized that RSI, stochastic has settings 533. RSI has a weird default setting, and I was used to using a 5 on the stochastic, and it wasn't adding up when I did switch to RSI, so I switched mine to a 5. It shows the same thing as Divergence, but you're going to notice a lot more accuracy with Divergence using RSI 5. So one of the things I'm going to go over with is Divergence. Right here, we're going to have a clear play of Divergence. As you see, the market is exhausting the high, and market decides to fall on the RSI. So momentum is your RSI, and price is here. Momentum, where all the banks and institutes, the hedge funds, and et cetera, to come into play, they place their roles. Market was clearly on a high uptrend. As you can see, it was just going in an uptrend. Eventually, the market got exhausted at one point, which was also, this was a clearly a midweek reversal. The market decided to get exhausted, and that is when we ultimately got Divergence. Let me move this over a little bit. That's just perfect. All right, so we also got Divergence. So in. My bad. We got Divergence, and Divergence is, like I just said, when momentum starts going the opposite direction. Over here, we have an overbought market because it's above a 70, and that means that the market is overbought. The market pressure was going to go down. Obviously, that was predicted to happen, but what happened here was that the market pressure decided to go up here. Momentum going down, price was still going up. As you can see, as it made higher highs, and it kept falling sharp, because in this area right here where the candle lines match up, as you can see, the wick extended, got to here when price was going down here. So this line right here was making a lower low already, way underneath the 70. And right here, was trying to make a higher high. It fell out, and this was all entry to go short. Just because the momentum was going in a different direction and price was going up, hence Divergence. And that was also what we would call a double top. So I'm going to write that out. Double top with Divergence. Very powerful move. A double top going into Divergence. Massive money on the play. Lots of pips you can rack up. Now, let me delete these two lines so you can see how much pips off rip. If you did get in right before it broke this neckline of this double top, which is a nice entry, at 10 GMT, one of the time zone trading signs that we normally would do, you would have easily racked up about 100 pips. And I believe that's in one day. Just for getting in a powerful play like that. Now, this is obviously before the whole drop. I just want to break down, some accuracy about this drop, where this was the head and shoulders pattern that did form on the H4 time frame, which is here. Just because of that one reason. We have a shoulder, we have a head, and we have a shoulder. And for some weird odd reason, it's a coincidence that on the RSI, we have that same play right here. We got like a little shoulder, a head, and a shoulder right here, which indicated on the H4 a drop. Hence the trick. You can find a lot of things like that with RSI or stochastic. Now, I do want to add a stochastic on here so you guys can see the difference between a RSI and a stochastic, just because of that one reason of understanding divergence. And I am going to drill this in because these are one of the things that I did find out about the market when Darius Kirksey did drop his divergence video. You know, I became more accurate with getting in a lot more trades that were exhausted. Either ways, I was still doing it without even knowing. So the power of knowing something, it takes you to a whole higher level of obviously, getting into a more crazier setup, a more crazier trade, just because of that one reason is to understand when can you place a higher lot. Let me look for stochastic oscillators. Stochastic. As you can see on stochastic, your overbought market would have been here. Okay, as you can see on your stochastic, your overbought market would have been here. Your overbought market would have been here. You see, when you have stochastic and an RSI, you wouldn't realize that right here, since the settings are a little different, there was a little area of being overbought where you could have got back in. Hence, right here above the 70. There you go. The same line that represents this line right here as sensing being overbought once again on stochastic, you wouldn't have seen that higher high being hit. Just for you to get back into another entry to short it. On stochastic, it does show the divergence, but the point is you want to get as many entries as possible to take advantage of the full effects of divergence. So I just wanted to knock that out, and I'm going to take away stochastic because I don't really use it. Moving on, I want you to also understand consolidation zones. While this market was dropping, as you can see when it's naked, you could realize that there's going to be a lot more plays, double tops, double bottoms, or whatever the case may be. And, during consolidation, you're going to realize, obviously, supply and demand. So how do you get accuracy with supply and demand? You simply go to an H4 chart. The hour chart, is very good as well. But just one of the things I like. See these wick areas right here? If I see wicks like that, I will draw my zones. One, connected to the highest of the wick to the body to draw it out. Boom. As you can see, market from this zone to the future market, you realize that the market did touch here, went back in, and touched right here, went back in. Well, my bad. It went in, then it went out, went in, then it went out, then it went, and it finally broke. Market represented it right here when it did go back up, and then it finally dropped. Before the drop, there were zones. So back into the hour chart, you will see how that plays a role. As for the drops, hence midweek reversals, short midweek reversals, however you want to call it, you're looking for your levels of drop and your levels of rises. Level 1, level 2, and then you see how this plays out beautifully. Level 3. 1, 2, 3. Second day consolidated once you got a double top. In some cases, you can say this is what is a zone. So now you got a supply zone at the high, drawn into the future, and a demand zone off of the 4-hour chart. As you can see, when market went down, it went back in, hit the zone, went back down. Consolidated, did another double top in this area, and drops. Now, how do you see if there was divergence there? It's very simple. If the market is flat here, and the market is flat on the RSI, there is no divergence. This is all making higher highs. This is all normal. There is no divergence. Once again, this is making higher highs. This is flat. There is no divergence. So you're only using, obviously, double tops coming from the high. Okay, you see more double tops. And obviously, you're going to see supply and demand. 3 levels of drop, very simple concept, and it goes up. Hits again, consolidates, and never really touched there. So that was another indication saying, the market is going to be dropping. So how would you figure that out? It's very simple. You get a trend line. You're going to start figuring out where the market in the future is going to go to. Very beautiful. The trend line, as you can see, I connected it from here. The reason why is because I understand that this is an exhaustion of wicks, higher highs, hence moving into lower lows. As you can see, the market hits and respects this 3 times, over 3 times, my bad. You got 1 hit, 2 hit, 3 hits. And then eventually it becomes, from resistance, it becomes a support. Market shoots back up. Never really touched that zone again. But what it did was that it dropped. And eventually it got here, was started trying to go back up, and it finally broke. Which was obviously that last leg of that shoulder, which is here. And going into the market, understanding how the market plays these variations, I don't think I really have to go too far into, time zone trading, but I kind of do, just so you could grasp this concept a lot better for your new members. A lot of new members, when they come into trading, they don't understand, these times of the day, the most vital, powerful times of the day to trade. And that's because, I already use 15 GMT, is obvious. Those are the most volatile times in the market. So once again, the times that we do trade is going to be from 10 GMT through 10 GMT through 19 GMT. I'm sorry, say that again. 10 GMT through 19 GMT are the times that you're going to trade. The reason behind that is because after 19, you want to close your books, close all your profits, get all that money, enjoy your day. The market's going to act a little funky after 19 GMT. Market is called Tap New York. To me, that's what I call it. When the market will act the opposite direction of what it was doing all day from London and New York. And usually, since London ends at 19 GMT, New York potentially takes over and does the opposite of what London was doing. London starts from 3 a.m. Eastern Time and ends at 12 p.m. Eastern Time. New York starts at 8 a.m. Eastern Time and ends at 5 p.m. Eastern Time, which is market close, where you see these lines. Hence, 15 GMT through 00 GMT. That's New York. So we stop at 19 just to avoid all this, crap. But in this case, if you was in a mid reversal and you saw 3 levels of drop and this only went up once, and this is a one big consolidation, don't think of it as a consolidation. If the market never really continued out with the highs and it's making lower lows, that, my friend, is what we call a midweek reset. So it continued, it failed to break the higher highs, and the market decided to fall. So when the market does fall, that means that you can have left your orders in, and it clearly broke that zone, and that was a head and shoulders. We're looking for another opportunity to get back in. However, there is more zones, and there's going to be a lot more divergence plays to come. And I'm going to go over that with a lot more triple tops or triple bottoms into the future market where we're at now. And just so we can be more clear on supply and demand. Sometimes you can zoom out. Sometimes, you can just zoom in. H4, like I always mention, is a nice chart to do it on. Here you go. Lower lows right here. Or lower high, really right here. Then boom. Connects over there. Go to H1. Go map that one out. And that would be the new high day when the market would drop, and that is a double top. Just really, really ugly. So let's go to an M30. If we can even see, yes, we can. Here's the first top, and here's your second top. This is the middle, this is the neckline, and this is where the market drops. So let me mark that for you. I like to do it on my wicks. I'm a fan of wicks. Market got up to the high, and there's your drop. Double top. Now, was there divergence on the play? Yes, there was divergence. On M30, there was divergence. Market was trying to go higher highs right here. This is really, really choppy. It's just kind of making lower lows, but it's kind of sloppy. But these are just one of those plays. Overbought, overbought, overbought. Pretty damn simple. that's perfect. Didn't even expect that. All right, so as you can see, I put a neckline right here as support. It represents into the future, as always. And look what happens here. We have extremely overbought on the RSI. It happened twice, and it went in. Before the drop even happened, where it did a long drop and it never really went back up to being overbought, but you see it testing the highs. This is called max entry. The reason behind that is because it's not only in support, believe it or not, that is also what I would call a supply zone. As you can see on the bottom here, the wick that extended out, extending into the future. Go to your H1 chart. Here it is, it breaks, goes in, tests it. Look, wick just barely touched it, drops, touches it, drops, touches it, drops, and so on. Finally gets inside, completely overbought. Is already touching resistance, they ain't breaking it, drops. Very simple trading I do, very simple profits I do. Day in, day out, gotta love it. Trendline game, very simple stuff. Very, very simple stuff. Market doing bounces. Here's another double top, touches that zone. Right here is kind of flat, very choppy. Here's a gap, and the market drops. Now, obviously, you're going back into time zone trading. Get your times. Here's your 15 GMT. Got your reversal at the 16 GMT. So this would be 8 a.m. in the morning. This would be 9 a.m. in the morning. Remember, we're trading from 10 GMT through 90 GMT. Here's your play. You wouldn't really have racked up that much, but you would have got 27 pips, and it being double top as the highs have been exhausted over here. You're looking for a nice fall. If the test was going to go back up, then you would get out. But here it goes. Market drops. Here's your play. 10 GMT, market drops. Could have racked up another 83 pips that day. Very simple. Market got oversold. It's now underneath the 30. Look, it tried to go back up to close the day, but you're not taking buys in the downtrend market. It's just retarded. I don't care if it's oversold. Just don't do it. Understand your levels in the market. As you can see here, the market went up once, it went up twice, and it resetted once again, making lower lows. So you could go all in right here, honestly. Just because of the market, when it did a head and shoulders pattern, a lot of people were confused. Midweek just ain't happening. You're right. It's midweek resets. Those are happening. Just because the highs were not going to happen. All the market was doing there was a strong downtrend, and there wasn't going to be no type of momentum going back up. Now I want to go find some triple bottom examples. So you guys, this one's perfect. Just so you guys can understand the triple bottoms. This one is perfect. This is an inverted head and shoulders. Shoulder, head, shoulder. Market went up, failed. Even that couldn't even bring it up to the higher highs. But more importantly, you got a zone. Got to love your zones. Go to H1. On a bigger time frame, probably like we call it H6, I believe. I remember this play. I was playing NT5 or Trader's View. This acted up as a triple bottom for me, and the market did go up as it did test it. 1, 2, 3. You got a shoulder, you got a head, you got a shoulder. Market went up, got a new high. Market drops. As you can see, when it did drop from over here, when the market did this little reset, it tried to go up 1 day, 2 days, and that's it. It reset it once again. Or you could say this is 1 day of rise right here, this little day, which is not really considered 1, but you could throw it out there. 2, and at the end of the day will still be 3. The market drops. But the whole entire time when the market was free falling, in my mindset, I was like, okay, maybe reset, maybe reset. 1 to 2 rises, and go back into a short. It's a lot of plays. Here's another double top. Right here, another head and shoulders pattern, shoulder, head, shoulder, drop. Coming back up to test it, drop. This doji was a nice reversal after counting levels. Level 1, right here. Level 2, right here. And then level 3. I know somebody's going to come in my inbox eventually ask, how's that level 1? Here you go. Level 1. This doji right here was my level 1 rise. I count mine like stairs. This is level 2. After that broken up, this rise from this candle to this candle became level 2. Right here became level 3. And it was in an uptrend. So what you think I'm going to be doing, especially if I saw a double bottom and it formed into becoming a W pattern. Obviously, I'm not going to keep going into short, even if I saw this. Like, okay, I'll probably, rack up some pips to get the hell out, because once it did this and it tapped right here to being oversold, it made no sense in hell that I was going to keep shorting this, being an oversold market, and it looks like a double bottom. Makes no sense. Don't do it. There goes your account. You're not in for that. You're in to make profit. Oversold, there's double bottom, you buy. That simple. Market goes back up at 3 levels of rise. You could have got it. So let's count those pips. One standard lot. If you did have it, could have made $434. If you did catch it while the candle did this, got up to here and had a little bit of pullback, that would have been about 40 pips. With it at one day, you could have made about $800 off of just one standard lot. Just messing around with the rise and the drop. And it being super oversold right here when it did do a reverse pattern, because you're going to be like, hey, how do I know to get in? There you go. Oversold, reverse pattern, clean levels of rise, got to being overbought, double drops, got to being oversold, reverse pattern, looks like a double bottom, flight, supply zone, drops, double tops. Damn. Here we go. There's the bottom of a wick. Let's do a line. Very simple. And I'm going to throw in some Fibonacci with this, and we can look at everything else, which it's going to give you some more accuracy. At the end of the day, we're about accuracy and getting into the trades. First leg of that double top was right here, hit a zone, came back in. Okay. This support line was not here before, but you could have possibly joined it a long time ago. If we go back a little bit. And the same support line eventually probably was resistance at the same point, a time right here. Resistance. Future market, boom. Got back up, supply, drops. That day, since it was such a clean setup with Divergence, you could have made a lot of freaking money. Let me mark it up better. Man, when Darius told me about Divergence, I was so blind. But man, this is so powerful. Supply zone, everything's confirmed. We got 1, 2, 3 full sets of rise. Gotta love it. This is one of those perfect examples. This is something that you want to mark down, write it down. Remember this into your memory. I never really write anything down. I take everything as a mental note, because I actually take it very serious. Full sets, 1, 2, and 3. Divergence. Market price was still going up. Momentum. So all your hedge funds, bank institutes, all the big players were getting here. You got a nice reversal. You got Divergence of it being oversold. It got a little oversold right here. Okay. You got a neckline. It looks like a double top or M. It's inside of that supply zone. You go all in. Guess what we have? A very fabulous day. You could have, if it had like a little pullback, you could have gotten it right here. At the end of the day, you would have had over 100 pips. Market became oversold. Hence, again, it started in divergence. And guess where it's ending? In divergence. Price, all right, divergence once again is doing the opposite of what momentum is doing. Price is right here going down while divergence was going up. Now I'm gonna mark that up a little bit more just so you can see it better. Price is going up. No, my bad. Price is going down and momentum is going up. And on a smaller time frame, it possibly was a double bottom. So let's go check the M30. There you have it. Here's your first, here's your middle, here's your last. Perfect double bottom, divergence on the hour chart, on the M30 chart. You got a full reversal. Could have gotten an M30 chart right there, got it on this reversal. And you could have got, oh crap. And you could have got approximately about 549 micros. That's equivalent to 54 pips, which is equivalent to doing one standard lot, which is equivalent to making about $449 within that day. Just off of, no, not in that day, just for that little rise. Overall, you could have done over 150 pips that day, which would have been equivalent to $1,500 with just doing one standard lot here, one standard lot here. It's the power of Forex. Gotta love it. Consolidation. Here you go. Couldn't get the high. Overbought. And we're gonna actually break this one down as well. Dissecting this one up. As you can see here, I put resistance line just because of that wick, and this was too far of an extension. So guess what I would have done as well, just to test it out, put another line here. Market couldn't get there, but it was overbought. I got a reversal on a smaller time frame on the M30, 3 inside out, and that means for me, pips, overbought, full extension, as well as supply and demand. Supply right here, tested as resistance, it's overbought, check. Entry, just a safe candle after this. You're really feeling confident here, you couldn't enter here just because it's 10 GMT and the candle closed and you saw that and you're just like, okay, it was oversold right here. But as you can see, market shot a long wick here. That was already a hint. When the market did this and it started dropping, it started doing that, and it closed red on 13 GM at the 10 GMT mark, that means a drop. This was divergence later on that day. Price was oversold, started going up. Price was going down. Here's an entry. Could have done. End of your day. Could have made your money and walked out. Zoom in some more. Okay. There's just many other examples, but you guys can get the point. I don't want to be boring. All right, that day when the prices shot up like crazy, which was I think Thursday, market did some damage. Trying to get a good zoom. It's about right. I could re-broker for this one. All those support and resistance lines that I drew from before, look where it's at. Candle was kind of a little exhausted right here when price went up. And when it broke all of this and it came back in, and it was completely RSI was blown out right here. You're just waiting for the opportunity. If you have an ADR indicator, ADR was completely blown out. Just forget about it. I think I have an ADR set up here. I don't. Just forget about it. ADR was blown out. I'm gonna draw a Fibonacci now so you can see how you could have got back into this trade before this rise and actually catch it off. So I'm just gonna clear this up a little bit. Actually, no, I'm gonna leave it. Let's do this. I love my fibs. Now, the reason why I did it from here, this was a high and this was a low. It's one of my ways of doing it. And I also had it on this chart, as you guys can see, which is I was going kind of crazy that day. But when the market was over here, exhausted this high, it was obviously a new high for me. So all I did was just draw my fibs to the lower lows. And as you can see here, there's 1 level drop, 2 level drop, 3 levels of drop. So this is a low. Also, this was also an indication of divergence. When you see the market this flat, as you can see right here, the market was this flat. The only thing you had to think about was, what's going to happen next? If the market's flat, which is another thing which I like when Darius did teach me about divergence, there is a play that you can do. There's obviously a triple bottom, 1, 2, and 3. Market right here was trying to go down. Market right here is going up. So when you had this as your last hit, 1, 2, and 3, and the market did a reversal, this is FMOC, clean the board, you could have gotten in for a buy. And it looked like a W anyways. So guess what? Rack up. Market on Fibonacci hit 61.8, which is strong price resistance zone for reversal. Market hits, wicks, drops. Shoulder, head, shoulder. Price goes down. Underneath the 0, now. I want you guys can see it. 0. Price is going to go back in. So it's underneath the 0. Price goes back in. It's a double bottom. Divergence. Price shooting down. Price shooting up. My bad. Price shooting down. Momentum shooting up. I love saying price because I like, no way, bro. All right. Price is shooting down. Momentum is shooting up. Sorry, my computer acted up a little bit. And what do we have is divergence. As you can see, market was oversold here and oversold here. Price momentum was going up. That was obviously a buy that you guys took. On Fibonacci is underneath the 0 zone. So we have one retrace right here. And you have another one right here, which is another trick that I love to do, which I'll talk about in my Fibonacci video above in the training. Price got into the supply zone. We have divergence, which started the day, and divergence ended the day. Market is underneath the 0. So what you think is going to happen? Market has to go back inside of Fibs, and it does. Okay. Market consolidated. Once it got back in, fell out, back underneath 0, goes back in, falls out, goes underneath 0, goes back in. Now it's 100% inside of a supply zone. Market falls out once again. Divergence. Market goes down here. Just randomly going over things. Underneath 0, so you're expecting for it to go back in. Market drops. Just couldn't do it. Goes back in. Now we got a clean setup. When price was this low, only thing you had to do was just grab supply and demand zone, take it, and draw it all the way out from that wick. Because it was kind of suspect. when price went back up to this high and it reversed right off of 0 0, you would, and it just had this weird fall all the way through Asian. It just kept dropping and dropping and dropping. The only thing you had to do is just check for your obviously, your marks. 10 GMT is when we start trading, right? So this is when we start your day. Okay, it's been dropping all of Asian. It's dropping parts of London. What is going on? There's news coming up. And ultimately, when you're thinking that far in, you're like, it's oversold. News is coming up. It's been falling all of Asia. Can't possibly fall all of London. It's oversold. It looks like a double bottom. It's underneath the 0 0. That's just all confirmation for you to go up. Look what it does. Remember, we was going over 61.8 as a strong price resistance zone. Market went all the way up to 161.8. Hits it, blew past ADR ridiculously, and creates a whole bunch of new areas in the market for you to have fun with. You got zones everywhere. You got all types of crazy things. And as you can see, when the market went up that high, boom, hits, tries to go up, couldn't do it. It's completely oversold in this whole area. Market goes up once again right here, oversold once again in that area. And you got a clean reversal, nice evening star pattern. Took a little dip. And the time that the evening star pattern did form was at 8 GMT. Sometimes you're going to have the move before London, which is perfectly fine. But, you're going to ultimately want to get in at London. We have level 1 drop, level 2 drop, and then we have a level 3 drop. And it looks like it's trying to go back up. But as you can see, it might most likely will and go into that zone for a nice little triple top. As you can see, 1 hit, 2 hit, and it could have a potential 3rd hit and go down. Now, however, if the market goes up this crazy just sporadically during, which is very rare for EU to go this crazy, 417 pips. So we're talking, if you have a 1 standard lot making 417 pips, we're talking about $4,170. Me personally, I didn't trade this. I've been going through a lot, but if I had 10 lots, that would have been about 41,000 for me. So depressing, but at the end of the day, this is what have been a nice setup for anybody to get into if they call it all the way down here. All of this, going into Friday, NFP and, everything going on. I believe NFP right here, 15 GMT, this is your NFP candle. That NFP candle only did 82 pips and it went up. So that meant that it was bad for the USD and it was good for the EU. And it did go up. It went inside the supply zone and then it retested it one more time and it dropped. And obviously the market's above the 100. So we think it's going to happen. It's going to probably go out, like I said, test this zone and drop all the way right back down. And that's perfectly normal because it's it's above the 100. See, when it's underneath the 0, you're expecting it to go back inside of the Fibs. When it's above the 100, you're expecting it to go back inside of the Fibs. And, that's basically it for the webinar. If you got any questions, hit me up. And love and enjoy life.